for 5 minutes for questioning. And as I mentioned in my opening remarks, I've introduced the TABS Act to place the CFPB under the congressional appropriations process, restoring the power of the purse and vindicating the separation of powers doctrine. Mr. Watkins and Mr. Johnson, please amplify your testimony how the CFPB's double insulated funding mechanism is unconstitutional and allows the CFPB to stray from its statutory mission and evade proper oversight. And as you answer that question, please also address these sky is falling concerns that the Supreme Court, if it upholds the Fifth Circuit decision, that this would call into doubt the constitutionality of all these other self-funded federal bank regulators, including the Federal Reserve, the FDIC, the FHA, FAA, et cetera.
So I'll begin. So in my view, the Constitution says no money shall be drawn from the Treasury, but in consequence of appropriations by law. What it meant by Treasury was public money. It was money that government owns, and that includes all the money that the CFPB uses to fund its operations. And when it says that Congress needs to appropriate that money, it means Congress needs to decide the budget of the CFPB, not the director of the CFPB. That is a decision that Congress and Congress alone must make. And so that's really critical from an accountability standpoint. But I do think that it isn't just the CFPB. There are other agencies out there that do have non-appropriated funds, and Congress should review those as well and think about how to return those agencies to congressionally funded appropriations process as well.
And Mr. Johnson, do you believe that the CFPB's unique novel funding mechanism is distinguishable from these other self-funded federal financial regulators?
Thank you, Mr. Chairman, for the question. So, one of the interesting arguments that was made in the cert petitions before the Supreme Court was whether or not the Bureau's funding can be distinguished from similarly situated federal regulators, and I believe it can. The Fifth Circuit certainly cited the double insulation unique structure, but fundamentally the CFPB is differently situated than the FDIC, the NCUA, the Fed, the OCC, in as much as each of those agencies has been assigned by Congress a safety and soundness mission. In other words, they're prudential regulators. And they provide a service to banks in the form of guaranteeing liabilities through deposit insurance. And they supervise institutions for safety and soundness to guard against the risk to taxpayers. And it may be appropriate for Congress to establish funding structures for those agencies to recoup the cost of that supervision from the banking institutions that are supervised by those agencies. The CFPB, contrary to those missions, is fundamentally a market conduct regulator. It has no safety and soundness mission. Fundamentally, the Bureau has no obligation to ensure the continued operation of institutions as an ongoing concern. It is simply there to supervise institutions for compliance with a discrete set of federal consumer financial laws. And so market conduct is distinct from prudential regulation, and it's a fundamental difference that I think should be accounted for in consideration of the Bureau's funding.
Thank you, Mr. Johnson. And another question for you. Since Director Chopra has taken over the Bureau, we've seen a new tactic of regulation without rules. For example, last month, when putting out a notice for proposed rulemaking on credit card late fees, the Bureau failed to fulfill its statutory obligation to convene SBREFA. Also, in March 2022, the Bureau updated its UDAP exam manual as a way of evading notice and comment. Can you explain the importance of implementing lasting policy directives, and how is the Bureau's recent rogue behavior harmful to consumers' access to financial services?
Thank you, Chairman. Briefly, Congress has established specific procedures that must be followed by agencies when promulgating rules. And rules are those which bind regulated parties in specific ways. And so any time an agency departs from those specific rules, whether reflected in the Regulatory Flexibility Act, whether reflected in the Administrative Procedures Act, a lot of downstream consequences and bad results can occur. And so you're seeing where the agency departs from formal legislative rulemaking, or even departing from specifically established categories of guidance like interpretive rules her statements of policy and blending the distinctions, and it creates fundamental uncertainty for regulated parties in the marketplace
And
to
my time
continue
is
trying their operation.